welcome back to the RationalInvestor.com's Daily Brief. Woohoo! Party! This will be our attempt. Brian always challenged to see whether he can get this all done in about a half an hour or so. To give you an idea, at least what I'm seeing, and I think our community in general, we have a pretty good take on the market and what we've sort of seen news-wise, econ-wise, philosophical-wise. I don't know, maybe not. Trading-wise, unfortunately, it's a bit of a choppy market. In fact, actually, that was the theme of our day trading session with Justin this morning was this looks like Chop Vegas. And actually, I even tried to take a trend-following trade in the stock market using my moving average system that just a new setup. I'm constantly working with new setups. And literally got stopped out, just bang, in your face. So Chop Vegas, totally. Actually, I am hunting an interesting gold setup. Another one of our day traders had mentioned that gold was perking up quite a bit here this morning. And yeah, there it is there, but it hasn't fired yet. So it's interesting if this double top broke down here. Probably be a half decent little intra or day trade here with the gold up $10 on the day. Mind you, the inflation data is coming out relatively strong, so and also strong out of Europe. And I get the impression that the North American economy is kind of wavering here a little bit. So you might find that there's actually a push, especially here in Canada. I don't know about so much the States, but in Canada there might be a push to not raise interest rates. So you might find that the Canadian dollar is coming off here. Yeah, look at that. I think we've talked a little bit about the Canadian dollar could be in a bit of trouble here. So action-packed episode. Try and get this all done in about a half an hour or so. Lots of stuff to talk about. And of course, today is Tuesday, which means that we have TRI's CTO, Chief Technology Officer, on the call on our Afterparty show. Sjord, are you here today, Sjord?
I am here. Hi, everyone.
Hey, all right. So we've got that to look forward to. Of course, there's another reason for Brian to be short and sweet and to the point, and not go over about. If we see this as 9:35 down in the corner here, I'll probably talk too much. Because we don't want those pannacooks to burn. They burn very easily on the Dutch stoves these days, I've heard. Especially in the Dutch ovens, right? Arr. All right, moving on. Always a good place to sort of start your analysis. Let's take a look at the breadth. What's the market trying to tell us? What's the internal message? Looks to me like the market's trying to tell us that it's getting pretty darn oversold. It's been kind of one directional for a little while now. And then also too, if we look at our histogram, looking at sort of rate of change of the market, you can see country funds, of course, egregiously oversold. And our magic silver bullet buy signal in the market is when the S&P 500 also gets egregiously oversold, sitting at minus 74.52, minus 71.1. Let's make sure we're on the right date here. Yeah. So we're getting close. And actually, I heard a really cool, it was one of these guys who follows the astrology, and he says that there's a huge pivot coming up here shortly over the, say, next week or two. Keep in mind it is the end of February here, 28th of February. And year in, year out, decade in, decade out, I've always been enamored with the Ides of March as a pivot in the market. From what I understand, we're actually, believe it or not, right now in a relatively good thing. And actually Cole, he was talking about this recently. And if I understand correctly, there's an aspect that happens tomorrow. Then we go into kind of a really wonky, screwy period where a whole bunch of sort of negative, planetary relationships. I'm not very specific with all that stuff. But it doesn't surprise me. I think there's going to be some sort of major pivot low established here through the market over the next couple of weeks. So keep your eyes peeled. And if I understand correctly, Fedsters We'll be meeting near the latter part of the month, and that will probably set the tone for the market going forward. Following that, our fun little FUMC chart notations and stuff you've probably seen. So, market's a bit, just not really. It just doesn't have any oomph in the tank. And in fact, position trading up. So it looks like we're going to break out through the top here on the gold. So our little potential day trade, I'll take that off so I'm not distracted. But it looks like the gold market's breaking out. Look at all these bear divs too. That surprises me. Anyway, when done, daily briefs, I might circle around, take a look at that again. Actually, I was really tempted this morning. I had a really, really nice little setup right out of the gate here on crude, and I completely missed the trade. Boo, hiss, boo. And then I had this little fogging bomb off of this bottom. It's not really the best looking bottom, but it sort of suggested, hey, maybe we get a run up top. So I had, I was ready to short up here. But there's a good example where all we could do is rally back to 78.6. And if anything, what a great example. It drives you crazy when you see it in hindsight, of course. But candle body highs for trade location. Look at that level right in there. And look at where the damn market stopped. Oh, it drives you crazy. Then you go out to, like, say, the hourly chart. Candle body highs for trade location. Believe it or not, anywhere up in here. It's really not a bad idea to be hunting shorts. Maybe that's not the best one. But that 15-minute, oh, there's a good one. 30-minute chart, 78.6. Candle body highs for trade location. I might just keep an eye on that level going forward. But as I said there a moment ago, I'm interested in that gold market. But we had the euro close go by. And we had a nice little potential double top coming in here. And I was fully ready, willing, and able. Actually, I fat fingered the trade here while I was talking. Somebody else was talking to me, and I fucked it up. But I always say, if anything, this is a really good example. I always say that if you make a mistake in trading, the number one thing you should do right off the bat is just cover the mistake, because a small mistake can turn into an absolute heartbreaker and can actually destroy your account. I remember there was a guy in crypto, about 8 years ago, that he let one small trading mistake get away from him, and it actually literally blew up his account, which is really sad. So don't be a Landon, that we used to always say. I think that was his name. Anyway, something. Why is gold up $11 an ounce? Well, we did have some inflationary data come out of Europe, which was fairly robust, for lack of a better word. At the same time, too, we actually have some pretty, I wouldn't necessarily say weak data out of North America, but not like booming higher, and might actually even give the Fedsters cause for pause. It is interesting to see the Canadian economy, and I've cautioned about this. I do believe that, number one, the prices of Canadian assets, like things like real estate, are completely unsustainable. It's almost criminal what's happened in our society here. I mean, I've shown you substitute drama teacher nonsense. Somebody graduating from high school right now and just wanting to go get a job and work. I mean, like literally a starter home in a major Canadian city is now the better part of $1 million. I mean, it's ridiculous. Complete setting the public up for actually a really bad go of it. And, the question here is, how do these long-term cycles play themselves out? And why do crashes happen in the market? And interestingly enough, there's the one thing that I've absolutely learned is crashes, quote unquote, 1929 stock market crash, the crash of 87, really isn't a crash. It's the people that are driving prices higher, aka the banksters. We know who they are. They just push prices way, way, way too far. They push prices to where they're fundamentally just absolutely inconceivable. And then you get this crash, and all it does is it just brings prices back down to normal levels. So I've sort of said that if you're going to look for any place in the world for a crash, it's going to be in places where the prices are just stupid. I mean, they're just idiotic. So, what a surprise. Now the Canadian economy, they're saying it basically just is completely stalled. And with like, what, $70, $80 oil price, and Canada technically has the second largest oil reserves in the world, why is the Canadian economy stalling? We should be rolling in money. But of course, socialism for the loss, right? I tell you, socialism doesn't work. And unfortunately, it's one of these sort of checks and balances kind of thing. So you have like the capitalists all bid prices or stocks and stuff up, and all the workers go, hey, that's not fair. Of course, we know that it's a fugazi. So to sort of bail out the banks when they lend too much money because they bid everything up, they have to dilute the supply of the currency in the marketplace, so which creates hyperinflation. And then the workers say, hey, we want more money. We want more money. And of course, woke politicians go, oh, here's $500 million. We don't have the tax revenue to pay for it. We don't have the economy really to pay for it. But hey, we got a printing press. Turn the printing press on. Boom. Instantly, there's $500 million to go pay for your woke plan. That really, if it was left to supply and demand, probably would never have gotten that funding. But anyway, it's the way it goes. Backdrop, interesting sort of dichotomy in the market. We've got German and British and French market soft on the day. Because like I said, I think we saw Econs there out of Europe overnight that were showing inflation's still a bit of a problem. So you can see here, France inflation rate came out yesterday, 6.2, actually ticked up. And of course, they're trying to bring this inflation rate down, so that's not working very well. At the España, 6.1, market was looking for 5.6. Wow, that's a big miss. Month over month, looking for a 0.5% increase, came in a full percentage increase. Uh-oh. So inflation problem out of Europe is not even remotely under control yet. And also too, we actually noticed, I think we did it in the after party yesterday. We actually took a look at the weekly commodities trend survey on the site, and it actually likes, interestingly enough, value added kind of product that we offer. When I was a commodities trader and broker, I used to run this program that I used to do manually every single week. And you notice things like the natural gas fund is setting itself up pretty bullishly. Interesting how the lumber market's trying to turn back up. Palladium market strong, but I don't really like the look of that. But interesting, natural gas and gasoline. Of course, we know buy your unleaded the middle of February, sell it the middle of May. So seasonally, this is exactly what's supposed to happen here. But it's, especially poor old. But when we got the video going, I noticed that Stuart's got his winter coat on again. I don't know whether that's a function of rising energy prices or he just is stressed by the hydro bill. I don't know. But boy, get ready, Stuart, because actually we got a cute little engulfing bar that came in on natural gas yesterday. I don't know what the heck it's going to look like in Europe, but that was North America. Anyway, so getting off topic here. Sorry, everybody. So point here is inflation data coming out of Europe, still relatively strong. And then when we looked at North American data, like we said, North American data is actually showing that things look like they're stalling out here a little bit. And I've made the argument, and I will continue to make the argument, Canada officially was a short in the end of 2017, beginning of 2018. Of course, we had to go through that 40-year interest rate cycle. As soon as that pivoted, basically that broke the inertia of the move. And if anything, what I kind of like, because I remember in dot-com boom, same thing happened. The 17 and a half year, 18 year cycle, it actually peaked in 1998. And I remember this one Goldman Sachs trader running around the floor of the New York Stock Exchange, and that was right through long-term capital management. I don't know whether any of you even know about LTCM. But theoretically, the bull market of that cycle was supposed to end when long-term capital management went under. That was supposed to be the crisis crash. Of course, the Wall Street bailed LTCM out, or yeah. And ironically enough, the only firm that would not cooperate with the coordinated bailout of LTCM was Lehman Brothers. And did you notice how Wall Street got revenge on them shortly thereafter? So, if anything, if anybody ever tells you Wall Street is not a sort of old school, old buddies, you scratch my back, I'll scratch yours. I can't remember what the expression is off the top of my head. Old boys network, I suppose maybe that's another way to phrase it. If you don't believe that Wall Street is that, then research the LCTM story. So Lehman was the only firm that wouldn't support the bailout, and we all know what happened to Lehman shortly thereafter. All right. Anyway, there's a funny history story for you. So, point of the matter here is Canada, Russia, Australia, South Africa, all the world's sort of commodity countries, they all should have technically been a short as of 2018. We had to go through the crazy Jupiter, Saturn, Pluto conjunct, I think they said there was like 6 different celestial events that all sort of occurred there through the early 2020s, which we're still in. Something like Earth has not seen this kind of catalyst of events in something like, I think it's like a million years, that all of these cycles are all coming to a head. And do you notice, the gods of war seem to be beating their drums pretty loudly. And, if it's up to Mr. Putin, I think he would probably actually like to nuke the West. Sickness. I'm surprised, actually, we don't have more drought talk. Famine, pestilence, disease. All of these cycles all seem to be coming to a head through this. And it's pretty challenging time. But anyway, the point here is we had to get through that massive... we even had an insurrection in the United States of America, political cycles. Oh, Jesus. Anyway, so the data today now coming out of the States is sort of like things are calming down. But this is and the reason why I'm sticking on this so long, and you see like the Dow's off 153 points here. What the heck's going on? Why is the Dow down? This is, and I've said this to you guys repeatedly, the Fed wants to try and get in front of inflation, or do they? That's a whole other conversation. Great reset, Klaus, all that crap. But the Fedsters have specifically said that they've gotten in front of commodity price inflation, natural gas, that kind of stuff, calm down. But they still have a major problem with the housing market. And of course, you got like Peter Fink and stuff, and his robot. Somebody sent me a video yesterday on how his bot basically is taking over the world. It's got about $20 trillion of the world's wealth all locked up for BlackRock. But the point here is that Powell has said this is one of the parts of the market that has to break. And then, of course, all the people that are working in the housing industry, and it's such a huge part of our society right now, they're all demanding higher wages and stuff. So if we actually look at the data, you see that this is the Johnson Red Book. This is a function of retail sales. Mr. Druckenmiller came out when this thing was up around 20% and said, what the fuck are you doing? You're breaking our economy, you stupid idiots. And then notice, as soon as he said that, all of a sudden, Mr. Powell got serious about, we've got to get in front of this inflation problem. Why? Because if we don't, somebody's going to actually start calling for my head. Anyway, Mr. Druckenmiller, of course, probably one of the best traders I've ever seen in my life, and of course, totally nailed it. But here we are. We're still sitting at 5-6% numbers here. So that's well above the 2%. This still has to fall by half. And you can see lower highs and lower lows. But you can kind of see if we actually look over the short term, this thing's ticking up. That's not what the Fed wants. And this is sort of the problem with the inflation. You know, you're seeing it out of Europe right now, is that we sort of got in front of things. Prices were starting to calm down. Interest rates were starting to stabilize. And as soon as that happened, all the consumers went, all right, let's go spend more money. And then again, we have news that, all of the houses are all getting bought up. And the question is who? Because remember, the Fed has gone and cranked interest rates higher. So you can't make the argument that the people that are speculating in the housing industry have cheap rates and the rollovers are really cheap for them. But this housing market just doesn't want to break. And Mr. Powell needs for this housing market to break. And you can see it's just parked. This is the housing price index. It's not rolling over like retail sales is. I mean, if anything, Mr. Powell should be looking at this going, okay, we are getting exactly what we want. We're hurting the consumer-based economy. But as long as you got the Mr. Finks out there running the world, right, and just buying up all of the housing, this thing just won't break. Now, it's interesting, there is our image. This is how bad it is. Since the 2008 financial crisis, that's it right there. And you see the dip. That's about 175. And the house price here is basically, more than doubled? Close to tripled? And so all of the excitement that we've seen recently is basically that. So, we're in a situation here where, this housing market and the housing prices are just not coming back down to earth. And if anything, what we need is this number to get back to sort of trend line growth. I mean, I don't really like this. This is like hyper inflationary kind of idea anyway. But you can see since the health crisis, this is what they did to prices in our society. And this is what's causing all the hyperinflation talk, is that the rate of change of this is just unsustainable. And then, of course, you look at Canada. And interestingly enough, Canada's prices, the U.S. actually were still sort of going sideways here. But Canada, I don't know whether I have it on here. I thought I did. Oh, I guess I got rid of it. You can start to see Canada is starting to break. But ironically enough, I don't really expect the American market to break too much. But I do fully expect the Canadian market to at least come back down to earth. I mean, I suppose I can show you that Twitter feed. I put the graphic out. I mean, this is, like I said, just think about, if you're my age, 50, 60 years old, your kids are now starting to go into the workforce. Now, my kid, of course, he will never go into the workforce, but I love him dearly. It doesn't matter. Point here is that, I feel kind of empathetic for all the other Gen X kids. I mean, this is ridiculous what this dickhead has done to us here. Absolutely ridiculous. So that's unsustainable. There's no workers that are going to come out of just Joe Six-Pack jobs and be able to afford that kind of number. So that means either A, the currency has to collapse in value, which brings this number back down to, maybe even think 50% rule. So the easiest way to think 50% is just take these two numbers, add them together, divide by 2, and you get the 50% level. So that's like 9, a million. So let's say 500,000. Okay, that's fine. That means this price has to fall $300,000 just to get back to the 50% rule. And that's like WD Gann. Just really, really basic TA. So I still think that that's what's in front of us. And unfortunately, I think that's the backdrop of sort of the broader economy going forward. Does, I suppose, make sense why gold is doing better. Gold did take a punch in the nose here, though, recently on sort of the Fed hawkishness in the marketplace. So we might see gold rebound smartly. Looking at a shorter, lower time frame charts, probably not. relevant there. Let's see, how am I doing on time? All right, so for whatever it's worth, I didn't really see any earth-shattering headline news that really was driving the market here. I mean, I do see that there's humming and hawing about student debt down in the States. I saw a couple of references to that. Um, a lot of just sort of meh. It's interesting to see how China is starting to come back into the fore. I think there for about 2 or 3 months, especially when Winnie was sort of waffling there, and it actually looked like he could potentially be losing sort of total control over there. Everything went very, very quiet out of China, but I noticed they're starting to perk back up again. Also, too, is really interesting. They're trying to stick their foot into the whole Russian equation. They put out some great manifesto, but ironically enough, they had like 7 points of why we'd want peace, and literally Russia broke every single one of those points. Ukraine never broke any of the points. It wasn't like Ukraine was invading Russia. So I think that the whole sort of intervention of China into the equation kind of just fell flat on its face, to be honest with you. It is interesting to see how China's getting really roiled over the fact that this TikTok, and I watched a video once about TikTok where every single keystroke that this guy put in was sent straight to some China central data repository. So it doesn't surprise me that the West is kind of like, wow, what the hell's this? So, I mean, I suppose CIA and all that, they probably do the same thing. But anyway, it's kind of interesting development there. But I don't know. I didn't really see anything news-wise that was really gonna, stop the headlines, stop the presses, all that kind of stuff. So, just a bunch of business as usual. As I said, I think the big drivers of the day are this idea that maybe the economy here in North America is stalling out a little bit. You're going to really acutely see that in a country like Canada, maybe even Mexico too. Mexico's had quite a run of it lately. U.S. data, it's just basically flat, and of course we know. Well, anyway, leave it at that. And then the European economy seeing heavy price pressures, inflation-wise. So actually, what I wanted to show you earlier was I don't really see a heck of a lot of change in the actual sort of there's the sort of daily picture of the ES. I think this short idea is still working. Lower highs and lower lows. Nothing really has changed there. Had you taken this trade, I think it's not a bad idea to move stops to scratch. Yeah, there's an old adage in trading. You don't really want to see a winning trade turn into a losing trade. I'd also suggest, too, if you could take some profits on these shorts, if you did short up top, that's not a bad idea. We'll have our Stock Pickers Club meeting tonight. We showed you the breadth indicator readings. Nice sort of free message for you. We're getting awfully oversold. The histograms are getting pretty washed out. Haven't quite hit oversold levels yet, but we're getting there. And as soon as this does get embedded on the downside, which probably takes maybe the next week or so to happen, then I think, oh boy, get ready. I wouldn't be surprised if there's some sort of dip down into, there's 2.618s. They probably need to be tagged. Talked about 50% rule in the Canadian housing market. Same logic works in the stock market, any kind of price action. So I do like the idea of the U.S. stock market trading down into these levels. Exactly how it happens, I don't know, but you can see lower highs and lower lows. And ironically enough, today is actually just a big hurry up and do nothing doji day. So there's your backdrop. I suppose looking at corn, it's not a down day. We actually gapped higher. We're up 6 points right now on the ES. So I think that Bitcoin's probably going to find a bit of a floor here. We'll see how it looks. Interestingly enough, off of this perspective, our algos told us to hop off and get off on the short side. So that, or not get on the, I don't really like shorting, Brian. I'd rather buy a put option than have naked shorts. That's just sort of how I work. But our crypto breadth indicator is still sitting negative. It broke down about a week or so ago. So we hopped off of the longs on this signal over here. Markets, the one thing that I see when I look at this image is chop Vegas. And as I had said earlier, our day trader room, with the little doji day, but, like our stock market traders, they like to follow this kind of image. And really, this is just this lower time frame charts, choppy, choppy, choppy. Geez, looks like somebody came in hard on the buy side here just a few minutes ago. That's kind of cool. So, lots of chop. Not really the best direction. As I said earlier, I had a nice trend following signal that told me, hey, if you want to go short, go short. Risk against this M top here. That failed. So that was it for me on the hunting trend continuation trades. Yeah, it's the way it goes. Trader's life. Wasn't that much. I think it was like a $30, $40 risk. So, but what a great analogy of chop central, eh? Just down, V bottom, V top, V bottom, V top, V bottom, V top. Blech, what a mess. And the end result of all of this turns out to be a big doji. With regard to the Bitcoin, sort of finishing off this conversation, it looks like I'm right about up against 30 minutes here. There's where our algo told us to hop off. We've been kind of thinking lower. We had actually an interesting situation where the market turned up through this window here. Probably the algo would have gone bullish here, but it didn't. It resolved lower. Interestingly enough, that if we actually zoom out, this move to new lows here actually confirmed quite a well-defined double top breakdown there. So technically we are making lower highs and lower lows. But what I saw here, and this is the comment that I put in our lounge this morning, is look at this, just V bottom, V top, V bottom, V top, V top. There's a little bit of a V bottom. There's a cute little W you could have taken. That worked out well. V bottom, V top, V bottom, V top? I don't know. Looks to me like we want to work our way a little bit higher, A, B, C, Ds. 4.669's kind of stopped this little bull here in the short term, which makes sense. If we do roll over here and M out, you can see that I'm looking for the market to come back down against these lows. V bottoms like to be tested. V tops like to be tested. But if anything, this is such a good analogy of how difficult I think the market is. You've heard Paul on our Wednesday shows say, what's the market state right now? It's difficult mode. It's hard mode. I think it really is. And this kind of image is going to absolutely destroy the noobs. They're going to have a very, very difficult time through this. So, go slowly here, people. I heard somebody the other day say, oh, yeah, technical analysis is easy. Yeah, it's simple. It's like, oh, come on. Don't discount this. In fact, actually, I saw somebody talk about a specific one the other day, and I looked at their TA, and I was kind of like, I don't know about that. This SOL here, I think this is the one that they were looking at. I can't remember. It might have been, might not have been. How do you draw your trend lines? I suppose I won't get into that kind of conversation today. I do see a lot of different interpretations on how to draw trend lines. We don't, we should wind this show up here. All I'm going to simply say here off of this chart, let's see if I can do this a little better. Maybe the daily chart's probably better. There we go. So, lower highs and lower lows defines a bear. Did we actually break out through trend lines here? I don't know. We have a rule at TRI that we really don't want to take a trend line breakout until you see market structure on the other side of the trend line. Suppose if we drilled down just to lower time frame chart, maybe these trend lines here you could use to define a trend line. But what I'm seeing a lot of, and this is scary, right, is let's hypothetically say, okay, that's a trend line breakout. What I often see happens in markets is maybe they'll move away, but notice, look how this market's come back and now it's walking its way down the other side of this trend line. Extremely dangerous. Very, very dangerous. And we have a rule. If you're going to use trend lines, okay, fine. You use market structure and be religious about this. Don't half-ass this. Don't go, all right, there's my trend line. There's my breakout. There's my trade. Oh, boy. Maybe. What I would say is, be religious about following market structure. I like this, but unfortunately, that's not a buy signal for me. Yes, the market moved higher, but then, oh, geez, now look at what I've done. Oh, what am I supposed to do now? So be careful here, folks. This is a dangerous, dangerous market state. And just that commentary there about the Bitcoin is what I'm seeing is a lot of sort of FU movies. Movies? I don't know whether you can say that. Moves. Little moves or movies. I don't know. Seeing a lot of FUs, and just breaking people's hearts right, left, and center. All right, this is a breakout. We're going to man in. No, we're not. And, of course, run all the stops. So I think, you're probably best. Maybe just, we have one guy on the site who says, I don't really like to take these trades until I actually get all three of these images pointed in the same direction, including the stock market. So I think you might be best to wait for the stock market to actually turn back up here. And of course, the breadth indicators that we follow here at TRI, crypto related, they're not really overly happy just yet. They're getting nice and oversold. I like that. But I'd like to see them turn back up and give us a nice clear indication of trend right now. Right now, I just don't have any clear signals. So go slowly, everybody, please. I'm thinking about you. I have your best interest at heart here. All right. I suppose the last thing that I'll show you is everybody in their life should get one cum shot. What? I'm sorry. I meant a shot at a cryptocurrency cum inu. I don't know. So there are still names doing this. So I would, what I've said to everybody, and I know that joke's terrible and I should shut the hell up, but I've said this to everybody. This is a market. When you see 5s and 6 on our weekly commodity trend survey, this is a market where pullbacks are buying opportunities. This is a bullish backdrop for our market state. Now, obviously, you can't go and buy something like this right here. You can't. You've missed it, right? There were plenty of opportunities. But just build your shopping list and just be patient. What is it a good idea to chase here? Maybe, just as an example, right? We just go there to there, do your reload zones, and then when this thing comes back into reload zones, you start reloading, and then boom, you'll be enjoying your cum shots now. Oh, that's terrible. Shut up, Brian. All right, I think I'll leave it at that. There's tons of money to be made going over the next, say, couple years. But just don't get into the habit of chasing. I can't buy that now. If anything, what I have to think about is where is my next double level to let them have some more up top. So that's sort of what I'm thinking right now. If you can get in on the W's, awesome. Rock and roll. We got one guy on the site who banged out another double today. I was so impressed with him. The guy just keeps banging out doubles daily. So there's lots of money to be made here, but just don't chase. All right. Have yourselves a great day, everybody. That's about a half an hour. I think we'll leave it at that. Gonna head over and listen to pannenkoeks sizzling on the Dutch oven and maybe get a new idea from Sjord. Remember, Sjord had given us this idea down here. You can see the chart again, same sort of thing. Don't chase. Can't come and buy that there. You can see where I got my bids working. So let's see whether Mr. Pannenkoek has any other ideas for us to chew on here today. All right. Have yourselves a great day. Be a mate for the win. All the best and bye for now.